Hey guys, welcome back. Well, the NASDAQ, it did exactly what we thought it would do today. It pulled back. The tech sector pulled back broadly across the board. Most of the AI hardware names that we follow on this channel had a healthy profit-taking kind of day. We saw Nvidia down, Broadcom down, Micron down, SanDisk. In fact, Micron was down by over 6% today. SanDisk was down over 5% today. Both of those stocks do have a little bit of silver lining, though. Let me talk about that for a second. Micron stayed up over $1,000 a share. To me, that's a huge sign. And secondly, in the pre-market right now, both Micron and SanDisk have significant gains. They picked up probably about a third or 40% of what we lost in today's trading action. So it does look like we're going to see a bit of a gap up when the opening bell rings tomorrow. But it was a different kind of day than we saw yesterday. We saw capital just rotate violently back into the tech sector yesterday. Today was a little bit of a more toned down kind of day, profit-taking kind of day across the board. I'm going to show you that in a moment, but there was something unusual that happened. The storage kings of Western Digital and Seagate, they didn't behave like the rest. They completely decoupled from the memory sector today. They decoupled from the broader AI trade. And I think that decoupling is telling us a signal. It's potentially showing us where the next phase of the AI infrastructure trade may be heading, because this wasn't a random market fluke. If you remember, we covered this Morgan Stanley report last night, and I think that caused a bit of the retail panic and the surge for these stocks today, which continued to make them grow. What Morgan Stanley covered in that report, if you remember, he said that he was pounding the table, that analyst, for Seagate and Western Digital based on the demand outstripping the supply, based on the pricing power and the revenue visibility that we would see for the structural shortage within the storage layer, and how Western Digital and Seagate were going to have just long-term revenue visibility for from the contracts that they're signing over multi-years, and the fact that their hard disk drives will be sold out, I think, through 2028 that he mentioned. So that dynamic caused these stocks to move differently. Remember, Western Digital grew by 16% on Monday. It continued to grow. It led the way across the entire S&P today. It was the top gainer across the board. But it wasn't just the Morgan Stanley report, in my opinion. I think we also saw an accelerant from AMD, because AMD, they announced two massive acquisitions last night and this morning and kind of hit the news wires. And their new infrastructure play that they're trying to bring to the market is going to completely rewrite the rules within the memory sector. They want to prove that flash storage can shift from a passive archive into an active system memory. So forget the retail debate over raw GPU speeds and processing speeds overall. That is yesterday's news in the market. You know that. We are in the memory wall right now, the memory bottleneck completely. So today's pricing action, it proved to me that we are in the opening battle potentially of the AI memory war. And AMD may have just launched a brilliant strategic attack to try to systematically dismantle Nvidia's dominance in the marketplace. So let's get into today's video. Let's talk about those acquisitions from AMD, what they mean to the marketplace, what it means to the memory sector right now, what it means to Nvidia, and how Nvidia could potentially counterattack back, and what we should do as investors, how we should protect our capital in our portfolio. So let's jump into all those angles and stories. But if you haven't done it already, make sure you hit like. Make sure you hit subscribe to the channel. I appreciate all you guys. Again, as I always say, thank you for your support. Thank you for your likes, your comments, all of that. It has been an awesome experience. Let's keep it going. All right, let me show you what the market did today, because I mentioned that the NASDAQ did pull back. You can see on the screen, it pulled back by about almost a little under 2% today, 1.89. Probably what we expected. NASDAQ took a bit of harder hit than any other index today. We saw NASDAQ grow more than any other index yesterday. Capital rotated back into it violently yesterday. I think we had a little bit more of a subdued day today. It was a profit-taking kind of day. But let me show you a couple other things. I mentioned it in the opening, the top stock gainers. Look who is on top, Western Digital. They were up over 16% yesterday, up over 4% today. This stock is moving. It closed at $6.81 a share. It was at almost $7.30 a share today. I'll show you that in a moment when we get over there. But I first want to show you kind of the broader NASDAQ 100 sector, because if you remember this yesterday, it was lime green. It was kind of just shining out on us on the screen. Everything was illuminating just this bright green. And today's a bit of a different story. We're seeing it's being very selective today. There's only a few stocks that grew. You see Apple, Google, Meta, some of the big Magnificent Seven. But down here, you see three members of the Fab Four. Two of those three grew. They operated differently, and those would be Western Digital and Seagate. Western Digital up over 4%, Seagate up over 1%, almost 1.25% today. So let's jump in and take a look at those stocks first before we talk about AMD's acquisitions and what it means to the market. But very quickly, I want to show you Western Digital, $27 gain. Look what's happening in the pre-market, another $23 on the board, another over 3%. But if you look to the right, today, their intraday high, they got to almost $7.30 a share. So this stock is moving well beyond kind of the fair price analyst average rating right now. We're going to see this stock get re-rated. We're going to see new price targets because it's dramatically undervalued in the market. I think Morgan Stanley kind of led the way with their report. Like I said, he was pounding the table. I think you're going to see other analysts pick this up and start to re-rate this stock as well. If we jump over to Seagate, you can see Seagate was up over $1,000 today, $12 gain. It stayed over $1,000, $1,031, picked up 1.25%. If you look in the pre-market, it's up over another 2%, another almost $23 gain at about $1,054. You can see to the right, it just got under $1,100 a share, about $1,097. So really strong day across the board for the storage players. If I just look to the right real quickly, I'll show you what Micron as well as SanDisk did as well. You can see Micron, a little bit of a different day right here, down 6% today, $67 down, but it stayed over 1,000. It's about 1,021. It's a huge win for me. But I would say if you look in the after hours of the pre-market, we're picking up another $27, a little over 2.5%. So the stock is moving close to 1,050 again. And SanDisk, same situation, down by 5.5, closed just under 2,000 a share, just about $9 off there. But you look in the after hours of the pre-market, we picked up $50 more. We're back up closer to $2,042 a share. So those are strong moves for the storage players, kind of strong moves in the pre-market for the rest of the stocks. I'm hoping to see a strong gap up tomorrow when that opening bell rings. But let's jump in and talk about those huge moves from AMD. So there were two that I want to cover. First, this came out this morning, and I think it was early this morning. You can see 709investing.com announced it. But AMD and Rackspace Technology signed a deal for a 30 megawatt AI compute deployment. You can see Rackspace far to the right here. Their shares are really low, right? $6 a share. They had a very small increase, 5%, but it was 30 cents a share. In the pre-market, they're pretty much flat right now, kind of gained it right back. But that gives them a massive compute across the board. And you can see they've signed this definitive agreement for a phased deployment of 30 megawatts of AMD-based compute across Rackspace global data centers. Deployment scheduled to begin in late 2026 through 2028. So that was one story from AMD that they announced. But the headline, I think, just wasn't that. It was this quiet acquisition that they made as well on this software startup. I mentioned it briefly yesterday, which was MEXT. And I'll pull that up, and you can see AMD acquires MEXT to advance memory optimization for compute infrastructure. So here's what Dr. Lisa Su said. When she made this announcement and why she made these moves simultaneously. She said she understands kind of the brutal reality that the rest of the market is waking up to, that AI scaling is no longer a compute problem. It is a memory crisis. So with the MEXT software tuck-in AMD, they executed a classic asymmetrical attack, in my opinion, at least an attack on Nvidia's business model. And by pairing the Rackspace footprint with the MEXT software defined memory layer, AMD isn't just expanding its cloud presence. They are offering corporate America a radical cut rate alternative to the hyper-expensive Nvidia hardware tax. And to understand why this move triggered a kind of a massive re-rating across the storage sector that we saw today with those those massive moves that we saw, it is all related to the kind of the memory wall, the single greatest crisis that we see right now in AI deployment. Because we know that high bandwidth memory, it accounts for a significant portion of the total AI accelerator hardware costs. So let me pull that up, because we've seen this growth with for the hyperscalers and just the deployment in general. And this article says, you can see memory has grown to nearly 2/3 of AI chip components. And right down here, I highlighted it. High bandwidth memory has grown from 52% to 63% of total AI chip components spending between the first quarter of 2024 and the fourth quarter of 2025. And you think about where we're going to be in the first quarter of this year, based on the other graph I showed you from AMD the other day and the huge growth for memory, it's probably even higher than that right now, because right now it's showing its memories at 63%. And you could see back in the first quarter of 2024, memory was at, we'll say, 52% right there across the board. So that is a big change. And to make matters worse, leading physical suppliers like Micron and like Samsung and like SK Hynix, they are completely sold out of the HBM allocation through the end of this year. And I think they're even probably most likely sold out into 2027. So if you're a cloud provider or a major enterprise trying to scale up an Nvidia data center today, you cannot simply buy more memory. The physical silicon literally does not exist in the market. This extreme cost and physical scarcity are severely limiting AI deployment. And that is exactly the bottleneck that AMD is trying to exploit. Because instead of trying to force customers to purchase more memory or force them to buy more scarce, hyper expensive hardware, AMD is using MEXT software to bypass the physical bottleneck entirely. At least that's their plan to do. Now, in theory, this is what MEXT is intended to do. MEXT uses an intelligent software engine to continuously predict data access patterns. It will reach down into the low-cost, high-capacity enterprise NAND flash storage and extract the data blocks that an AI model will need next. It tries to predict what it will need next, and it'll feed those data blocks up into the high-speed memory microseconds before the application asks for it. Now, the result is that AI companies, they can run larger, more complex models using significantly less expensive physical hardware. AMD, they didn't invent a new chip here, but they are trying to use software to break the memory wall that we see in the marketplace. They're trying to go right at NVIDIA's presence in the marketplace by using this software overall. And to be fair, the hardware purists will immediately challenge this concept. And they'll point out the fact that NAND flash latency is measured in microseconds, where DRAM latency is measured in nanoseconds. And they are completely right, because if MEXT software engine, if it guesses wrong even 1% of the time, the GPU will sit idle and it will completely destroy the system throughput. Furthermore, trying to integrate this startup code across a massive global enterprise cloud ecosystem is going to be a big validation hurdle for AMD to overcome. But here's why the critics, all of us, we may be missing the forest from the trees with regard to this approach from AMD, because their play right now, what they're using MEXT for, is never intended for the heavy frontier LLM training models. They are weaponizing this specifically for the enterprise inference and localized agentic workloads, where data access patterns are significantly more predictable. And by integrating MEXT directly into AMD's data center software portfolio and ROCm platform, Lisa Su is handing her sales team an incredible pitch to take to corporate America. They now need to go to their buyers overall, to corporate America, and prove that AMD's powered inference rack can handle massive, complex agentic workloads for a fraction of the capital expenditure required by a raw, unoptimized hardware stack. But if software is being deployed to make flash storage behave like high-speed memory, what does that mean for the memory manufacturers overall? That's what I want to talk about next, because who wins? Who gets disrupted in this model if this becomes successful moving forward? So let's jump over and talk about, who wins in this memory trade, or who's impacted the most. Here's the critical point that most retail investors are missing. Software-defined memory tiering does not eliminate memory demand. It does shift the point of leverage, though. But I think most retail investors are probably asking themselves this question. If AMD's MEXT software, if that allows data centers to stretch their existing hardware, doesn't that ultimately reduce the overall physical memory demand? And the short answer to that question is no. Because in economics, this is a classic manifestation of Jevons paradox, something very similar to what we saw with Google and their TurboQuant earlier this year. Because in the market, when you make a scarce resource more efficient and more cost-effective, you don't destroy the consumption. You exponentially increase the demand of that resource. So by dramatically lowering the prohibitively high cost of memory tiering, AMD isn't shrinking the market. They are unlocking a massive wave of downstream enterprise AI workloads that were previously too expensive to deploy. So let's pull up the memory titans and talk about the impact to each of them with this new software from AMD. So if we look in the upper left-hand corner, we see Micron. Micron remains the undisputed king of the training layer. Nothing in this announcement changes the fact that training frontier models still require raw physical HBM. And nothing changes the fact that Micron remains completely sold out through 2026. So do not panic and assume that software tiering destroys the HBM thesis. AMD's software simply acts as a necessary pressure relief valve for localized corporate inference and it leaves Micron's core training growth story perfectly intact. If we shift to the right and take a look at SanDisk, SanDisk potentially is a massive direct winner with this software rollout, because if flash becomes an active extension of memory tier, enterprise SSD demand structurally accelerates. As corporate data centers adopt software-defined tiering to bypass expensive hardware constraints, the demand for premium, ultra-fast enterprise SSDs is going to explode. Memory is perfectly positioned, SanDisk is perfectly positioned to capture this high-margin enterprise shift. And then we look at the bottom two layers, the storage kings that we talked about earlier today. Guys, these are potentially the biggest winners on the board here, because by using predictive code to pull data out of flash and make it perform at DRAM-like speeds, AMD is effectively elevating enterprise NAND flash from a cheap, passive cold storage archive into an active, high-velocity layer of the core computing pyramid. You cannot have an active, high-velocity flash tiering without a massive, low-cost foundational archive sitting underneath it. Exactly what Western Digital and Seagate can provide to the marketplace. This explains why Morgan Stanley and JP Morgan aggressively hiked their price targets for Western Digital. And explains, in my mind, why we're seeing this aggressive move in the marketplace. It's not just the demand that Morgan Stanley called out and the fact that the revenue visibility and the pricing they'll have for years, but also this structural shift in the importance of the storage layer. We know the hyperscalers are already buying up all the HDDs they can, but if AMD can successfully roll out this architecture with MEXT software overall, it'll exponentially increase the demand overall for HDDs in the marketplace. So let's jump over and talk about NVIDIA's counterattack overall, because if software-defined memory tiering is the next wave overall, if that's the next battlefield for enterprise AI and economics, NVIDIA has a massive decision to make. NVIDIA has never won solely because of their fastest chips. They win because they control the entire software ecosystem through CUDA. If AMD begins taking corporate market share by lowering infrastructure costs via software, Jensen and NVIDIA will almost absolutely and certainly have to respond by weaponizing NVIDIA's multi-billion-dollar cash that they have on hand. NVIDIA cannot let AMD own this open space total cost ownership advantage. So keep your eyes locked on these potential partnerships or acquisition targets for NVIDIA and what they could move. It could be their next strategic move. There's a few companies I want to call out. You can see the three: Cove, Memverge, and Weka. I want to talk very quickly about each one overall, but Cove is an undisputed pioneer in pure software-defined memory. If NVIDIA absorbs Cove and bakes its software-defined memory architecture directly into the core CUDA software stack, they instantly eliminate AMD's software-only capacity argument, giving Blackwell and Rubin enterprise clusters native dynamic memory pooling capabilities right out of the box. Now, if you look at Memverge in the middle there, they specialize in multi-tier memory orchestration. Acquiring Memverge, would give NVIDIA an immediate battle-tested enterprise software framework to manage the extreme memory demands of agentic AI models, optimizing memory pipelines before AMD can scale MEXT engine across global enterprise clouds. And then finally, Weka. This is the most, in my opinion, the most lethal threat on the board. Their technology bypasses standard limitations to stream data directly from cheap flash storage right into NVIDIA's high-speed chips. If NVIDIA buys Weka, they lock the entire data pipeline into their own proprietary ecosystem, rendering AMD's open source pitch completely uncompetitive. So those are the three moves that we could see NVIDIA make if they make any moves at all. They may, in fact, just ignore AMD completely and keep going about their business. But the fact AMD is moving, guys. Their market cap got up to about $900 million. They very well could be the next trillion-dollar company based on some of the moves they make overall. So, guys, in closing, I think for the past 2 years, we all know that Wall Street believed that the AI trade was primarily about compute. Today, I think AMD is making the argument that the next phase of AI may be more about memory efficiency and data movement. And in an AI economy that is strictly constrained by hardware costs, physical capacity, and power, we may start seeing flash storage become elevated from a passive archive to an active compute infrastructure. Now, Nvidia has to decide whether to build these capabilities internally or to buy their way into a software-defined memory layer. But regardless of which chip giant wins that corporate chess match, one thing is becoming increasingly clear. The next phase of the AI supercycle will not be decided by who has the fastest GPU. It will be decided by who wins the memory war. Which is the company that can move, store, and serve data the most efficiently? The market simply isn't repricing AMD today. It is permanently repricing the entire memory stack. Guys, I hope you enjoyed the video tonight. I hope it made you think about things a little differently. If it did, hit the like, hit the subscribe button, and I'll see you on the next video. Take